What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, in the beginning, when I created this dividend portfolio on June 20th, 2019, now again, this is combined, okay? Yes, net worth, growth portfolio, IRA, and dividendo manifesto, my dividend portfolio. I started in June 2019 to start invest. And I did some travel nursing, and this is when I started to turbocharge my dividend portfolio. You see my net worth is here, and then you notice right July, August, September, I start adding up more stuff, maxing out my IRA, putting stuff in my dividend portfolio. Numbers are going up, numbers are going up. And then in July, right around here is when I stopped travel nursing and I started working as a nurse practitioner. So that was a game changer from 2022 to 2025. I still think it's bigger game changer than my nurse practitioner years because I turbocharged my dividend portfolio. And I'm going to show you some changes that I made and how much income I'm generating with my dividend portfolio and some things that I will be doing. So I'm going to be going over that shortly. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out my dividend income for July and some changes I'll be doing right now. So in the past 12 months, I just want to go over these numbers recently. I've earned $15,717.68 with HOOW. CHPY made $7,251. TOPW $4,105.26. BTCI $3,804.88. CEPI $3,337.07. GPTY $3,312.83. AIPI $3,153.94. TSLP 2,757.18, FEPI 2,150, GOOW 1,118.63. Now, Misty, I did dump them, and I showed you the challenge. I'm not getting a good return with Misty right now. So in the past 12 months, $248.44. Maggie, I made $233.49. AMDW, $227.40. QQQI, I'm starting to get up there. 218.68, IWMI 216.62, NVII 211.80, MSTW, and again that one's getting killed, 198.44, blocks 185.80, AMZP 184.09, IYRI 181.03, and I have Eggy. That one's doing really well, and I'm starting to get some distribution with them, which excites me. So I'm going to go over a few things for my dividend portfolio. I'm going to go over some holdings I have with the game changers. Now for CHPY, I have a total of 673.27 shares. I'm up 31.03%. And I do have some shares on the loan, so I'm lending out some shares to shareholders or people that are investing, so that's going to be some nice passive income as well with CHPY. The other one that's starting to make some noise for me is GPTY, the YieldMax AI and Tech Portfolio Option Income ETF. I'm up 3.20%. So this one is actually in the positive for me, and I'm getting really nice distribution from them. So I think long-term wise with these two, if I can get to 1,000 shares and then go from there, that's probably the long-term plan. AIPI, I'm at 282 shares. So I'm starting to realize with FEPI, CEPI, and AIPI, maybe I should get to 400, 500 shares, use that distribution to start buying dividend growers. Now, EGGY is another one that I'm probably should be at 400 plus shares long-term wise because the distributions are very nice, and I'm actually up 10.10%. Now with SCHD, I'm at 42 shares. So again, long-term wise, I like dividend growth. I implement dividend growth. I implement high yield distribution. So yes, my philosophy is integrated with high yield, high dividend growth. And I like REITs. I haven't added some REITs, but we'll discuss that probably at the start of next month in August. But again, with these high dividend growth ETFs like SCHD that are a deal right here, 42 shares isn't really going to cut it. I need a little bit more. So that's one thing that's in my mind is maybe 400 shares total, move on to the next one. So, or maybe even more because it's such a deal. So that's one thing that has crossed my mind, because I still believe that you got to have a good balance of dividend growth and high dividend yield. You can't just, I don't think you, it's just not my philosophy of just doing high dividend yield and relying on these weekly paying ETFs, because something can go bad. And then you need to have a good balance. Things go bad. HOOW, I took a hit in. My distributions went down. Good thing is my distribution for this month is really good. Technically, I'm going to be reaching the 7,000 mark. I know it says estimated, but I'm just going to declare 6,140.79 plus 916.95 for tomorrow, because that's actually the distribution for today. So reinvesting the dividends, and again, I went over the video with XQQI, OVL. Check out my previous videos, by the way, with what I'm doing with my strategy. I made it to the $7,000 mark. So I'm happy about that, again, to get back there. But again, long-term wise, I'm going to feel confident getting to the $10,000 mark per month. And am I getting there? Yes. Is it going to take some work? Yes. So there are some tricks that I have up my sleeve, but right now, because of the investing strategy, it's working. So I don't want to just get $10,000 in these high yielders. I want to use that income to buy dividend growers. I want to use it to buy BDCs. So I want to have a little bit of an integration. Yes, I'm 40. Do I feel confident retiring on $7,000 a month? No, because it's not consistent. So that's the thing with these weekly pairs. There's not a lot of consistency. It's great for now, but again, we're looking at long-term dividend growth. So integrating high yield with dividend growth is very important. And you look at really good dividend growers right now, such as Broadcom. Yes, it has a dividend yield of 0.69% and it's 377.75, but if I can have a distribution of 8, 9, 10,000, use that income to buy dividend growers like Broadcom, because I'm going to use stock analysis as an example. So 2022, we have 41 cents, 46 cents, then we have 52 cents, then 53, then 59, then 65 cents. So we have some nice dividend growth. Dividend growth at 10.23%. We have a payout ratio, according to stock analysis, of 42.27%. I like referring to stock analysis for a lot of things, especially dividend growth, looking at dividend growth and looking at the trends of the dividend. So stock analysis is a very good reference, and I use them regularly. So that's one thing. Look at the dividend growth of this. So that's really good. So again, you're seeing hikes. Yes, it's a quarterly payout, but getting those hikes, that's what we want. What we want as dividend investors. We want raises. Yes, high yield's great, but what happens when the market's down? Who's going to win? The dividend growers are going to win, not the high yielders. The dividend growers are always going to win because they are the really strong companies. They're the ones that are usually in the S&P 500. And they're the ones that have been consistent, and they have a tradition. So I always like studying the trends. If the trends aren't there, maybe it's not a long-term dividend growth stock. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I'm going to try to squeeze in a video for you tomorrow. Take care and have a good one. And again, I have a disclaimer at the beginning of the video. Don't use my YouTube channel for financial advice or tax advice. Go to a tax advisor or financial advisor for advice. Take care.